Good evening, ladies and gentlemen, and welcome to another episode of America in Black and White. Tonight, we have a very special guest, Mr. Jokari Truehert. And let me tell you guys a few things about Mr. Truehert. Jokari is affectionately known as JT, or in the business world as the serial killer, due to his numerous singularity-owned businesses. Has established a diverse portfolio. His ventures include a financial planning company, a real estate investment company, a real estate mentorship company, a ride sharing company, a wedding photography company, and an auto flipping company. As a Virginia native, I've been in the financial industry for over 29 years, humbly starting as a mortgage loan officer. I then progressed to roles such as manager of loan officers and credit card collections manager before transitioning to opportunities as a mortgage processor and underwriter. My extensive knowledge of the mortgage industry and other financial areas in banking has enabled me to venture into real estate ownership and excel in the lucrative field. Over the past 20 years, I have flipped numerous properties, including single family homes and commercial properties, for profit. Recently, I purchased 3 apartment buildings as buy and hold investments for passive income. I am currently working on a book that will detail the entire purchase process from start to finish. The book will also highlight various lenders, including hard money and private money lenders, mortgage brokers, contractors in certain states, and down payment loan providers, among others, offering valuable insights for your personal journey. For those serious about entering the real estate industry, I am offering free 30-minute personal one-on-one mentorship appointments to help new investors kickstart their journey to ownership. Ladies and gentlemen, I introduce to you Jokari Truehert.
How's it going, Charles?
Hello, sir. Welcome to the show.
Thank you for having me. Thank you for having me. Great to be
Yes,
here.
sir. I'm honored and I'm very happy to have you here on the show. Is there anything you'd like to add to the bio that I just read?
No, you covered it all great. I always laugh, chuckle when people call me a serial killer. One of the clients DM'd me one time. He's like, "Man, you're a serial killer," and it just stuck with me. Now everybody says it. So, but yeah, everything you said is basically the whole repertoire of what I've been doing and what I've been working on. Excited about the opportunity to just go into the multifamily business, and that's a main goal right now for me is to establish the passive income, but at the same time teach people how to do it since I have so much information to share.
So, can you, before we get going, can you just tell us what led you to this passion? For wanting to do these wonderful things in real estate that's basically setting trends that we all should want to follow.
Right. Well, one of the things that I have the opportunity of doing in my career is being able to be the guy behind the curtain who basically will make the decision whether you qualify for a property or not. And so that portion of the financial field, or the mortgage field, I should say, people don't have the knowledge of that. And so when we look on social media today and we see so many people so interested and passionate about making passive income, owning properties, that's great. But at the same time, a lot of the people that they're being educated by, they're just giving them the education based on experience of the process. But no one knows the true identity of what it takes to actually purchase. And it's not just multifamily, it can be single family ownership. Some people don't have the desire to own and rent. For many years, I never wanted to be a landlord. I just think that as I've grown older, got more mature, understand what it took, and now have an idea. I'm more patient than I was. It takes a lot of patience to be a landlord. So I think now I'm at a great stage where I can manage my properties, and I do all of my managing myself. So it's intriguing to me to challenge myself to not only grow my portfolio in real estate, but also teach people. So that passion has just been growing over the years and seeing how the mortgage industry has been going. And now with social media and the craze of people being able to be educated, I just want to be a part of that process and educate people because I know I have that knowledge truly of the back end of it.
That's wonderful. See that I tell you, this is what our communities need. If you want to know the truth,
Right.
and here at American Black and White, what we like to do is we like to make sure that things that that's going to help to build, to educate, help people to learn, crafts and things that they can do to better their lives. You
Mhm.
know, these are this is the main thing because I think the ownership part of the property, actually helps puts you into gives you a point that, well, it puts you give you a foot in the door to where you can actually not only start to live the American dream, but you can make your dream a reality.
Yeah, yeah. And and one of the things that for I brought my first house when I probably was about 22 years old.
Mhm.
Um, and when my girlfriend at the time, we were building a family, and we both were into real estate. I was already in the mortgage business, and so it was nothing like being able to go into a lender and just be able to sign the paper, have established credit, have the necessary means and knowledge. Because what really gave me the confidence to walk into a lender and ask for the loan was only because I educated myself on the process before I went there. A lot of people go to the lenders, and the lenders have to say no a lot of times in order for you to be able to say, okay, you get shot down. Some get discouraged and walk away. Some people go back and they do the work that it takes to get back to the table and to buy the property. And so for me, being able to educate people, to give them that confidence on what it's going to take for you to have ownership, whether it be for you a single family home that you just want to buy, or you want to do the multifamily side of things. I want to make sure that you have that education because everybody doesn't have a desire to own a lot of properties and manage it because it takes a lot of work. But some people have the desire, they may just want to actually buy a property and live in the property, live in one of the apartments, rent the rest out, and they think they can manage that. So sometimes those small goals that can be attained, I want to be able to show people how to do that. And if they want to grow, I also want to be there along the way to help them accomplish those things as well.
Oh wow, that is like totally, totally awesome.
Yeah.
Well, I'll tell you this: make sure you sign me up because I definitely, want to get into the real in-depth knowledge.
Yeah.
Because taking a real estate class was actually good.
Hmm.
But from that point to now, preparing to take the state exam,
Right.
it actually I know it's a little different,
Right.
but what I know is that the process varies from state to state.
Hmm.
And so, different states require different things, and so it's never one thing. So, with that being said, how does one, decide or find out, like if, like I'm here in Georgia,
Hmm.
and let's say like I'm interested in North Carolina, um, Virginia, Maryland, and also um, what was it? New Mexico. How do I actually find out, like if what's going to be the difference in the different rules? How do I go and do that research to find what's going to be the differences in how I prepare?
Now, when you say prepare, are you speaking in terms of preparing as for to have a real estate license in those states, or are you talking about investing in those states?
Both.
Okay. Well, the biggest thing is you have to do the research on, like you said, a lot of those states are going to vary. For instance, the three properties that build property buildings that I brought recently, Those are in Texas.
Mhm.
So my main goal was it was really trial by error, because what I was doing was I was looking at, I'm here in Virginia, and Virginia's market is saturated because so many people have gotten into the market, and there's a lot of investors, and there's a lot of investors with money, and so they've taken all the properties, and anyone that could get in, they got in some of the outer cities where there's not probably a desire to live in those areas, so they can buy the properties at a much better rate. But for me, my goal was to find a state that actually will allow me to get more bang for my buck, so to speak. I wanted to be able to buy multiple properties if I could, and even I would have been satisfied with just one, but I wouldn't have done it if it was here in Virginia, because I would have paid 2 times what I paid in Texas. And so, and I'll give you an example of something that people will run into. And so, again, this is an educational piece. Texas, I found out by trial by error when I got to Texas. I'm halfway through the process of getting ready to, already got approved by the lender. We're going to the closing table, and we now have a set date. But now they want me to establish my insurance for the properties. I didn't know that Texas became one of the number one, actually, it's number one out of all the states in claims. So that means car accident claims, that means bad weather, natural disaster claims. And so what that meant for me was everyone either pulled out of Texas, the big wig insurance companies pulled out of Texas, or the ones that are still there skyrocketed their prices. So now, where I was sitting on passive income after I pay everything, the mortgages on those 3 properties, my goal, my take home out of it, my profit per month was going to be $2,700.
Mhm.
But now, because I find out as I'm already knee deep into the process, I find out that Texas insurance went sky high. Now I lost my profit, went from 2,700 and it dropped down to about 1,900. So that's how much of a difference I took just from a hit from my profit based on just finding out what information I didn't know going into it. So basically, to answer your question, you just have to do the research to see what areas would you like to be in, what's your price point you want to be at, what you're willing to sacrifice. Because I have to fly out to Texas to go see my properties. I love to stay on top of everything, meet my tenants so they know who I am. So all these things are things that factored me into what state I wanted to invest in. I probably am not at the point where I would be bold enough to invest in states I'm not willing to travel to or can't get to in a reasonable amount of time. But those are the things you look for. You just do the research and basically look at insurance, which is escrow, taxes, and insurance. What's it going to be rolled into your payment? Because most of the private lenders, which you're going to use for these type of properties, you don't go the traditional route like the Bank of Americas and some of those, the big names. You go to private lenders to do these kind of properties. Because what you're doing is you're asking them to put these buildings into your business name. You're not asking them to put them in Charles King's name. You want to put them in your business name. In order to do that, Bank of America and those places usually will not do that unless you're maybe one of the bigger investors. So you have to go the small route with some of these private lenders, which are basically private money and hard money lenders.
Oh, wow. So, something that I mentioned earlier, when we have a lot of people that now are trying to get into home ownership.
Mhm.
Can you tell us a little bit about what that process is from start to what it would go from start to finish, as to what that process looks like and what they should be doing to prepare?
The investment side of investment property, or just
No,
single family buy?
yes, family home buyer.
Yeah, so if you're a single family home buyer and you're getting into it for the first time, one of the great things about that is that if you've never had the opportunity to own a home, then there's plenty of programs out there for you to actually take advantage of. A lot of the hesitance of people not wanting to go into home ownership is because they're thinking about, oh, I heard that I have to come up with 20%. And so when we look at the market today, on average, most of the properties, depending upon where you live and what state you're in, you're looking at 20% to you could be $20,000 or more, or even more. Something somewhere in the area I live in, 20% might be, $80 to $120,000. So on most people's mindset, I don't have that kind of money to invest in a single family home. But there's so many things you can do. The lenders will educate you on that. That's great. If you have a mentor, that's great. One of the things I always tell people is, if you want to, don't exclude mortgage brokers, because a lot of times mortgage brokers are a great resource. Actually, when I brought the properties in Texas, that's what actually saved me on getting this deal. That's a longer story. But your process is basically going in and saying, what can I take advantage of and what programs are out there for me? There's FHA, which is basically a government program, which basically they have you pay 3.5%. That change, I believe, that changes between 3% and 3.5%. But for someone buying a house that may be $200,000, 3.5% as a down payment is about $7,000. So that's much more attainable for someone trying to buy a property. And so the process is, first selecting a lender, going in and understanding what your payment is going to be, and then having someone that's educating your lender that's going to educate you on basically what that payment is going to look like for you. And then also choosing a good realtor that's also going to be able to point you in the right direction. Sometimes they'll lead you to some good lenders that will help you with some of those startup programs. And so they'll walk you through that process for home ownership. But the main thing is, know exactly where you are financially. Be honest with yourself on how much you can afford. If you're a single person, if you're a single parent, if you're, have a spouse and you have children, all these things have to be thought about. What can I sacrifice into a payment? And the way I look at it is, we pay so much money just in rental and renting a property or renting homes and apartments. We would be paying a mortgage the way the industry is right now. So that's very important.
So, what are some of the things that people should look for or look at when they decide they want to have a realtor help them in that process?
The best realtors, of course, are going to be your realtors that know the landscape. I'm not going to say that it is good to have a realtor that has been in the business for a long time, because there are things that you'll run into, issues that you may run into, and their experience will help you get through that process. So yes, experience is going to be very important, but at the same time, a realtor that knows the landscape. Because knowing the area you'd like to buy in, or maybe as a buyer, you're not thinking of buying in certain areas. You're thinking, oh, this is where everyone wants to be, so I want to live there. Well, that may not be beneficial for you financially. So the realtor will be able to tell you, hey, think about this. Maybe in this city, probably about 10 minutes or 20 minutes outside of where you want to live, it has good schooling for your children. It's reasonable on your pocket for what you want to invest in. So the realtor is going to know those nooks and crannies of things that can help you to actually invest in the right area, get the right property for you, and then also maybe point you in the right direction on where you should go to get the money for that property. So a realtor is crucial, can be very crucial to that buying process.
So I think now when people do business with most realtors now, I think they make them sign contracts.
Mhm.
What do you think is the importance of actually reading that contract before you decide if you want to stick with that realtor? Because I think they make people do that for like about a year or something like that. Am I correct?
Yeah. So yeah, that's a good point to bring up, because I ran into that a few times with some realtors that I work with now. we don't go through that process because of the simple fact I usually won't sign anything till I know I even want to work with you. So I make them kind of work for it first before I even sign the contract. And they're okay with that because if they want the business, they're just going to do the work and they have to prove themselves to me. So, but for someone that hasn't been through the process and doesn't know that, the main thing that you're looking at, of course, everyone thinks about how much is the percentage that realtor is going to get, how much is a percentage that the broker that the realtor may work for, and then also the sellers side of things. So people want to know those things. But the other portion is how long am I locked into this? I had a realtor that I got into one of the properties when I first moved to Richmond, and I didn't like the guy, but I had already signed the contract, and he had me locked into it for 9 months. And so, I didn't want to work with the guy anymore. So I just waited it out and I just didn't buy the property because I didn't want, even though I could have went elsewhere and we could have worked it out, I didn't want to give him anything that was came off this property. I didn't want to give him a percentage to, make any money off of me. So, that's something to be, cognizant of, but it's not, so important in the gist of the whole process, but it's one of those things you do look for.
Oh, cool. Well, one other question here, and to continue along that same line,
Mhm.
when they have you in this contract, 6 months, 9 months, 12 months, and let's say, like you say, you didn't like this guy, and let's say if you decided that even though you still was in that contract, you didn't like this guy, and you found another realtor,
Mhm.
is there a price for like breaking that, or do you say, hey, let's just separate ways? How does that work?
Well, it depends on it could be a penalty to it. What usually happens in that case, if it gets to that point, most of the time the realtors want to be peaceable about the situation, to say, hey, the guy doesn't want to work with you, this family doesn't want to work with you. And if he's reasonable, he'll just let it go and not do anything. If he wants to be a stickler because he doesn't like that he's not going to get the business, then usually what happens is both realtors will come together, put their heads together, and see how they can work it out. Most of the time, there's always an answer. I'm one of those people that believe there's always an answer to everything. And when it comes to getting business, people at the bottom line are going to be able to sit at the table and make something happen. Whether you have to lose something because of it, or whether they have to, just tell you to walk away, just in general. So there's always an out in everything.
Oh wow. So let's talk about this. People that look like you and I.
Right.
Um, what should they be looking at to determine what's the best area, city, or whatever have you to purchase? Because some of these cities, especially in these southern states,
Mhm.
they still do redlining, but they do it in a discretionary kind of way.
Mhm. Mhm.
how
Mhm.
do what how do we know where to look, where to buy, and why to buy? Because I think some people do that wrong, as you mentioned in the beginning.
Yeah, and again, that's going to come where you don't want to go into it blindly. I'll say it from the standpoint of an investor, because of who I am and what I look like, I'm aware of that factor that has to be paid attention to. But when it comes to the investment side, most times what we're investing in, we're not living there. So at the end of the day, that goes out the window for me because no one knows who the owner is at that point and who's buying this property. At the end of the day, you have someone speaking for you. In my case, I was really had to leave a lot of things in the hands of the realtor in Texas because you have to use someone that's in that state. And so my realtor, I'd feed him all the information of what I wanted to make sure we got done, and he would, relay all of that information to the selling realtor. So realistically, no one saw who I was until I showed up at their door and knocking and telling them, "Hi, I'm I'm the owner." Now they're looking at me. I won't forget never this. I was, and see, one of the things, the reason why I tell people to call me JT is because it's for a few reasons. One, because my name gives away that I'm of some ethnicity. So they already know that just from seeing the name. But when you see JT, you don't know what I am or who I am. And
Right.
so I started that trend in the mortgage business because I was constantly dealing with people, and it was just easier for them to remember JT. But also in the buying process, when I'm dealing with these hard money lenders, they don't know who I am. They haven't seen me. They're just going off my track record. So they don't care who they give the money to. But when you decide to buy properties in some of these areas less favorable for people like us, they're going to find out. And so I was just going to tell you, when I went to Texas, I went about a month and a half ago. And the process for me to buy this property, I was working on these properties since August. I didn't close on the properties until February. That's how long people have to realize some of these things are going to take long, especially if the property is out of state. So you have to be prepared for that. But I went and I did all this. I did all the paperwork. I went out there. It was about a month and a half. So I'm reaching out to all of my people. So now I'm sending letters to the tenants and I'm saying, hey, just there's a new ownership in place. They just see the business name, they see all the letterhead information, they still don't know who that owner is. So I go down to Texas and they got these letters beforehand and let them know all of my requirements and stipulations. So one of my tenants was working in the yard and he was under his car. And so I'm out there with a leather binder and I'm writing down and I'm looking around because I told them there were going to be some renovations going to be happening soon. So I'm outside and I'm sitting in front of, and all of the buildings are lined up next to each other. So I'm writing all this information down, and I see this gentleman looking at me, and we're not of the same color. So he's looking at me like, who's this guy writing all this stuff down? So they just think I'm a contractor. I just had on some regular jeans and sneakers, and I'm writing everything down. So this particular tenant also owed me money, and he was late paying his rent. So I walk up to him in the driveway. He's under the car, and he gets out, and he looks at me, and he says, "I didn't give you permission to come and come in my yard. This is private property." I said, "That's fine because it's mine." And you should have seen the look on his face when I told him. His whole demeanor changed, and so and you should see his demeanor was more, he had his chest poked out. But when I told him it was mine, and I said to him, "I'm JT," and because I never told him who I was, and the business name has the JT in it, you could see it in his face, like I just opened my mouth, put my foot in the mouth to the owner of this apartment, and I still owe him money. And so his mouth just dropped and his whole demeanor changed. And he went to calling me sir. Yes, sir. And it's nice to meet you. And he wanted to walk me in the house. And so I get a kick out of that. So, when I invest, I don't care where it's going to be. If it's a good deal, it's a good deal. I'm gonna go where I want to go because it's time to break those walls and break those barriers and not worry about the color of my skin. If I got the money to put up to buy this property and I can sign my foot on my signature on the line, I'm going to do it. And I think that nowadays we can be empowered to be able to do that because there's so many resources out there. We see a lot of us doing it right now. So I get very intrigued when I see a lot of women who are not only realtors, but powerful investors. And they're doing so many great things in different places like Georgia, South Carolina, Florida, a lot of people that I'm able to connect with on social media. And so I'm just asking for a seat at the table. And so it's nice to be able to not just buy properties and sell them off for a profit. It was nice to now buy them and say, I'm the owner of these properties. And, one of the things that I just want to say real quickly, when you're thinking about home ownership and you're thinking about being a landlord, please don't get into it thinking it's all just money. One of the things I get gratification from is when I was able to I met a Spanish lady. One of my tenants is a older Spanish lady. And I introduced myself to her. So I went to all of my tenants. They all knew I was coming, and I was able to meet with them and spend some time with them. You know, the gratification is not just the passive income portion for me. You asked me earlier what drove me to have that passion. I also was intrigued the fact that I can make these tenants better lives better, because when I went there and I was looking in the apartment, you know, I brought the property without seeing it. I only saw it through inspection. So I had a very good inspector, and him and I, you know, thoroughly went through everything. But I was able to really visually see things that the pictures don't tell. So being able to go there, see my tenant, and she was telling me, you know, the landlord never did this and he never did that. That's the beauty that I get of it as well. I feel responsible for these people. I feel responsible that while they're under one of my properties, I want them to have the best experience. So whatever it is that you're going to have an issue with, I need to be able to be there for you, because I'm asking you to give me money to be here. You should be asking me to make sure I'm there, to make sure your comfortability in this property while you're there and under contract is to the best of it can be. And so I actually love that part of it. I love that I have the opportunity to affect people's lives in that way. So I'm looking to continue to make that grow.
Wow. You know, just think about, as just saying some of the things that you said, there are an enormous amount of people that's always complaining
Yeah,
about landlords
yeah,
because a lot of them are slumlords.
yeah,
But when you just think about this process that you explained and the things that you do to go out your way to make sure that your tenants know who you are,
yeah.
that will make anybody feel comfortable. And it's like, hey, as long as I do what I got to do, I know I'm going to be taken care of.
Right,
That's the way to go.
right, right. And that's one of those things where, you know, you hear about slumlords all the time, and because all they care about, they went into it just for the money.
Mhm.
And I get it. When we see social media promote multifamily homes, I've never seen this much push. Even when I was younger and I was just starting off buying properties, there was never talk about buying multifamily properties. Everything by single family homes, or I'm from the north, so the apartment complexes are apartments, stacked apartments. So they look like houses, but they're just stacked apartment build. And so there was never any multifamily investing, and there was never people my age that I am now or my color really doing this. They may have brought one, but you know, you see it now that people are really trying to be educated in it. And so when you go into it, don't just think about, I just want to make money off it and I want to set my, people talk about generational wealth, great, but if that's all your focus, you'll never be successful in being a landlord, building your portfolio, because what you should do is be concentrating on, I'm getting into this to take care of people. And if I take care of people, do right by people, take care of my property, stay on top of it, everything else is going to work itself out and give me back tenfold.
Wow. So, so just one other question here in this area.
Mhm.
With that being understood, about about purchasing anywhere you want to, if you got any knowledge on have any knowledge as to the way it works in the via the VA, to my knowledge,
Mhm.
was that if there are such areas where it seems like there's gonna be problems,
Mhm.
due to what you look like or whatever have you,
Mhm.
they always try to make sure that they suggest or try to change that, so nothing happens.
Mhm.
Do you know of that to be true, or have you ever heard that things like that have happened before?
Now, when you say, are you saying about maybe a particular neighborhood trying to steer people from moving into the neighborhood?
Yeah.
Me personally, I haven't gone into that. I mean, I could say that the neighborhood I'm in now, it's
Mhm.
not a lot of us here, you
Right.
know. But you know, when again, that goes to the realtor. That's why the realtors are so strong and so important to the process. You find a realtor you can trust. You find a realtor that's really just out to get you a good property, no matter where it is. But I've never gone into anything where someone tried to stare me out of something, or I've heard people actually being stared out of it because of their background, who they are, and what they may represent to the outside looking in. Um,
Right.
Fortunately, I've been fortunate that that hasn't happened to me.
Wow. Okay. So let's pivot here a little bit. And tell us, how did you transition from financial planning to real estate investment?
Well, if I have to be honest, I would say to myself, I never transitioned out of it. I think when I mentioned transitioning, I've always been in the back end, sitting at a desk of some sort. So when I mentioned being a manager of loan officers, I'm directing these people who are going out there and drawing in business to find those ones who are in the buying process. When I'm speaking about credit cards, I was managing people who were basically debt collecting on credit cards, on credit card debt. So, and being an underwriter, being a processor, I basically was in the process of where people every step that there's three major steps that in the buying process on the back end. It's the people that are processing, which are the gathering of all information. Those are the people that are talking to you and saying, "Hey, we need your the last 6 months of your bank statements. We need you to send us your pay stubs." Those are the processors helping to gather them. From that point, once all that information is gathered, it's going to the underwriter. And that underwriter is the one that you don't like hearing about. And because they're the ones that's either going to give you good news or bad news. And their job is to go in and assess that everything you've given them is truthful. Everything that you've given them goes with the state and the guidelines of the mortgage industry and the lenders guidelines. And then from there, if you get the approval, now that approval goes to the closing department, and that closing department handles all your taxes, insurance, and all those other things, and gets everything packaged up basically before you're able to go to the table and sign all your documentation on that property. So that's the process I've always been a part of in some shape or form. I've been in that office doing those things. And so now with having the accolades of being able to manage, to direct people, to help people grow, now that I wanted to transition into more financial freedom, but at the same time, just freedom in general. Once you get to a certain age, you start getting to the point where you don't want to be cooped up and working hour after hour and punching a clock. Now I'm at the point where I want the freedom. And so being able to be in the financial side of planning people's futures as far as their retirement, um, death benefits, disability, healthcare, long term, short term, having those options to be available to. I'm basically transitioning from helping in one way and I'm helping in a different way now. Now it's more about where you're going in the future as an individual, where are you going in the future as a business. I'm helping you to transition your life into retirement and to financial freedom. And so that's why I offer the 30-minute consultation, because it gives me an opportunity for someone to just come to the table and say, "Hey, JT, this is where I am. This is what I have. This is what I don't have. How can you help me?" And then that consultation is a more of a fact finder mission. And that's why I don't charge people for it, because there's not a lot of information that's going to be exchanged in that. It's more about, JT, I don't know what I'm doing. I don't know anything. I deal with people like that with insurance. They'll come to me and they say, "I don't know what a term policy is. I don't know what a permanent policy is." They're looking for a direction. So that 30-minute consultation helps me to direct people where you are and what you need to do next. And a lot of times these seminars we see in the broadcast, they're great. They're motivators. You see people that are doing great things, making a lot of money, got a nice portfolio, but a lot of times you don't know what the blueprint is and what step 1, 2, and 3 is, and so forth. So I want to be able to help people with that process.
So tell us, using me as an example, I'm coming to you and I need financial planning.
Yeah.
How does that process work?
So depending upon where you'd like to be in financial planning. So my first question is, hey, Charles, where are you right now? Do you own any property? What's your situation as far as, do you have it? Are you a W-2, meaning do you work for someone? And if you work for someone, do you have 401k? Do you have an IRA? These are investment accounts that typically you would get within the company. If you don't have those things, what is it you'd like to accomplish in the long run? Are you looking to invest in real estate because you just want to make a passive income? Do you want to invest in insurance policy to set up your retirement? Because there's insurance policies now where a lot of people are getting educated, and it's beautiful to see it, because so many women are calling me more than men, and they're saying, "Hey, what's this IUL? What's this a whole? They ask for, what's a whole life policy?" I've never seen women at 27 years old, 30 years. I just talking to someone yesterday, 34-year-old, has 4 kids, and she's setting up, permanent policies for all her children. And so for instance, not to go off on you as an example, but this example with her, I said, well, where are you? What do you like to accomplish? Well, I'd like to make sure that my kids have money when they get older. So your 401ks and things of that nature are not an option for them. But you can open up an IUL permanent policy, and it may cost you about $18 for a child, and you can set it up. And as they're getting older, this money is going into their account, and it's earning 5.5%, 6%. By the time they're out of college, they have money to either pay for college, they have money to either invest in properties, the way you and I are talking about, things that our parents may not have had the privilege of being able to do so. These mothers and parents are able to set these type of things up. And so, to go back to your question, so I would just say, Charles, where are you right now, and what's your future goal? What would be the end result of what you'd like to see? Do you want to see continuous money coming to you every single month for the rest of your life? Do you want to just retire and say, hey, I have, $500,000 in life insurance policies with that earned cash value, and I own a few properties that have equity in them, and I've been able to keep all those properties? So those are the conversations that I'm going to have with you, just to assess what you'd like to do, and then based on, give you the options that I think would be best for you in that process.
And so with that, let's say like you mentioned the IUL, or you mentioned IRAs and 401ks and things of that nature. Do you assist these clients in learning how this process works, or do you have a system in place that they can use to get there?
Yeah. And so what my goal is, I know you talked in the intro about my book. So what my goal is currently right now, as I'm planning that, what the goal is to do an actual book. And it's not going to be a long, you know, thousands of pages up to it. I just want to write something that's more, more of a pamphlet size, because basically the process I went through to learning the multifamily investing portion really was a totally separate process to what I was doing when I was buying investment properties, because I can buy investment properties using the old conventional way and going to some of the big banks. And so back then it was different. Now a lot of it's private money, but the blueprint of the book is basically to help people to understand everything from the point A to Z. How can I do it? Where do I need to go? And I'm giving them the information. I'm giving them lenders that, now these lenders are going to have to pay for it. But the reason why I can do things for free, or the reason why I can do them for a slash in the cost of the book, is because of the simple fact that the people that are getting in this book are going to have to pay for it. And so what it is just blueprint on hard money lenders. They won't have to go and search on the internet for anything. They're going to be able to see hard money lenders. They're going to know what they are and what they do. They're going to have brokers in there. They're going to have realtors in there. There's going to be all the states that I've dealt with, but I'll be collecting those things as well. These are going to be pieces of things that may take you months to figure out and learn, and you're going to be able to open the book and be able to do it yourself. Use the phone numbers, use the email addresses, use the internet website links, and be able to call all these people that I've worked with and done business with, and you'll be able to have that at your access and be able to work your deal. And so, in the process of investing in insurance and things of that nature, I also invite people to talk to me about how they'd like to grow their cash value, being able to put money aside instead of just thinking about going and taking money from a bank and borrowing from a bank. Take the money from yourself. Open an account that's basically going to add money. There's no savings account right now. They can tell you about high yield savings accounts that earn 4.9%, 5%. Those accounts, you have to leave thousands of dollars in the account all year long and don't touch it in order for you to maybe make $500. But you can open up an insurance policy that right now earns, I got one now that earns 5.3% right now. And that's going to earn every month. So not only are you paying that monthly premium, you set it up for one of your children for $18, but then you say, you know what, I got an extra $100 this month. I'm going to throw that in there. That $100 is getting that 5.3%. So why would you not want to set that up? And see, the mindset of people is, well, I don't want to open it because I can't spare the extra money. Somebody going into my account and taking that premium payment out. Well, you go to some of these fast food places, and just to eat fast food now ain't cheap. You go to these fast food places and you spend 20 something dollars just to feed you and the children, just to, for, so I don't want to name the names, but you go and spend some of the money on these people just eating breakfast. You just paid for 3 policies probably for all your children. And so now your mindset is saying, no, I don't want to invest in that. I don't want no one going in my account and taking that out. Think about the money that you're spending to feed yourself. Things that we spend Starbucks, things that we spend expensive money on by the month. At the end of the month, is $200-300. You could have paid policies to take care of your family and to grow your children's cash value over years of time if you would have taken that same amount and sacrificed for them. So it's just a mindset that people have to do and have to want. I'll tell you one more thing. I don't want to prolong it. I had a conversation with a family friend, and he said to me, a lot of times people think when I start talking about financial planning and things and insurance and things of that nature, they think that I'm trying to sell them. I'm just talking about it because it's if someone taught me or taught you, I want you to tell me because I don't know, right? And so he said to me after I was talking to him for a while, he was like, well, me and my family, we're just going to do something different. We're not going to do that route because we don't have the money to spend and spare, to put into that type of policy. I never told you a price on how much it costs. But at the same time, every month you going on trips. Every month I'm seeing you posting, doing things. Those things I see you doing are costing you money. So what it is you're not putting a value on the safety of not only the death benefits that if something happens to you, you're able to take care of that out of your pocket. You're not putting a value on making sure that when your children get older, they don't have to go and ask for, do GoFundMe pages for somebody to help them pay for their school books because they want to go to college, or your daughter wants to open up a hair salon. She can't do it because she can't get the funding for it. You know what I mean? These are things that will cost you pennies today, but would be thousands years from now. That's how we have to think about, our financial planning in so many different ways. And that's what I want to educate people on.
I'm going to stay in the same area, but I'm going to pivot on it a little bit. What you're speaking of is more than just value, but I want to know, give me your opinion, or if you can give us your opinion. How do we grow our communities and spend our dollars within our communities? What are some of the things you think we should be doing with that? Because our communities need growth.
Well, one of the things I think that are crucial for us, which I'm very proud of, that I see in a lot of cities, in a lot of states, we're starting to get knowledgeable. And people talk down about social media, but one thing social media is good for, it's opening our eyes to what's out there. When you look through my social media platform, a lot of the people that I am connecting with are my people. And so and it's not, and again, if you got a good deal, I don't care what color you are, I'm going you if you're going to give me a better deal here, I'm going to go there. But at the same time, I give our people an opportunity first. We have such a bad stigma that we don't help each other, but all the other races help each other. We have a bad stigma that we're not professional, but all the other, ethnicities and races are supportive of one another. We have to start being supportive of one another first, and that's the goal for me. To first, when I do business, I go to all of our people and give them opportunity. When I do my contractors and I hire contractors, I'm going to our people first and giving them opportunity to do it. So it starts with us. When we see these small businesses open, someone opens up a restaurant, are we going to that restaurant and patronizing that business? That's how we help each other grow. That's how we start seeing ourselves support one another. That's how we to get ourselves built out of that stigma that we're not professional or we can't get a seat at the table. There's a lot of women and men getting seats at the table right now. I love seeing women empowered now. And so a lot of sisters doing that. I'm proud of that. My goal is just to add to it, but at the same time, and you'll never hear me talk about money. One of the things that's one thing I like to say. People talk about money because of my religious beliefs. I won't talk about money and wealth and all those things. So I'm not going to tell people about making millions and how much you can make. You might hear me say passive income, but that's about it, because we all got to make a living no matter what your beliefs are. But one of the things I truly believe is, if you're a hard worker, you get up every day, you hustle, you do what you need to do, you plan, you set goals, and then you attack those things, you can achieve anything. And so your wealth or the amount of money that you make is really based on what you're willing to put into it. I can't determine and tell you you're going to be rich because you're going to invest in real estate, because you could be a terrible landlord and you could be terrible at the business side of investing. So my goal is not to help you continue that. My goal is to help you get started so you don't make a lot of mistakes that are costly financially and mentally. Because one time when you get knocked down enough trying to buy investment properties, you'll probably quit. And so my goal is to help people understand the process so they just don't give up. They just have to make sure they stay the course. And so if we invest in each other, we support one another, we continue building together and keep learning from one another, we can that's how we get out of that stigma that we've been in for many years.
Mhm. So, what inspired you to become a mentor in both financial planning and real estate?
Well, anytime you're in the financial business the way I am, and the company that I work for, you're already a mentor, so to speak. Every client that I have now, I tell them I work 7 days a week. I don't turn off. Every day that someone needs me, if my phone goes off, if I'm if they call me now, they can't get me right now. But as soon as I finish with you, if they call me during this show, I'm going to get off and I'm going to call them back. So I make myself available first, and I want them to feel like JT is not just a business transaction. Doing business with JT, no matter whether it's investing, no matter whether it's financial planning, that's a relationship. And so I want you to have a relationship with me. And that relationship is going to not only help you, is going to benefit me. And then hopefully you'll turn that into a referral to someone else. So I'm mentoring you no matter what, because if you call me and don't know what these policies are and how they benefit you, I'm mentoring you into what's the best way to go. So realistically, my life path has always been sort of mentorship, because everything I'm learning, I'm always telling someone about it because I learned it before they did. And so now with real estate investing, you see a lot of people make a lot of costly mistakes. And I'm going to make mistakes, but they're less likely to happen because now I have a track record of buying properties. I have a track record of ownership. I'm hands on every property that I own. And so I'm teaching people how to be hands on as well. And what they do with that information is on them. But don't go spending thousands of dollars for someone to bring you into a seminar, tell you a bunch of things that get you motivated and you ready to run into a brick wall. But then you walk out of there and then you ask yourself, okay, I spent the money, but what am I supposed to do now? So that's what my goal is to help people get to that point. I don't want them to be clueless about the process.
Tell us, what does mentorship mean to you?
Mentorship in the easiest form is guidance. Guidance, because you're going to go into something. Sometimes we don't even know when we're being mentored. When you go to a job and you start off in a field that you have no clue what to do, but the manager felt you'd be a good fit because of some of your background history and your work history, you're going to go in there and they're going to say, okay, I'm going to sit you with this person, and this person is going to mentor you to get you off the ground. So in life, we're always having a mentor of some sort. It's just in whatever field that we decide to be in, somebody's going to be a mentor for us. So if you're getting into the space of real estate, why not get with a real estate professional such as myself to help them mentor you to make sure you're understanding the job, the responsibilities, the downfalls, but also the pleasures that will come from it, because you sat and allowed this man to mentor you that has the experience and the track record and is helping you to get to the goal that you want to get to.
Mm. Wow, that's powerful. Can you share a pivotal moment in your career as a financial planner that shaped your approach to mentorship?
I think I don't have one specific thing that was like a turning point for me when I think about mentorship. I think that there's a collective inspiration behind it. When I see people, some people think mentorship is inspiration. And when I say that, I mean someone stands on stage and has a microphone and tells you, if I can do it, you can do it too. And they think, and then they say, pay $1,000 for the ticket, and then I'm going to give you exclusive, access to me, and then you pay for it. But then you realize you're in a room full of 50 other people that paid that same $1,000 ticket. And then now the person, all they're doing is they're mentoring you, but they're really just having a conversation with you, but it's 50 other people in there with you. You wanted the one-on-one interaction that you and I are having right now. You know what I mean?
Exactly.
That's what I would thrive off. Not, oh, bring me into the conference room with all these other 50 people, and then you're going to be up at the chalkboard writing down things, and you're going to tell me what the steps are to invest in. Now I'm not getting that one-on-one because I got a lot of questions. I'm going to tell you, I'm one of them people that I get in a room. You get me in a room, I got 100 questions for you. I need somebody to make sure that they're giving me the answers I need. And I don't want to pay thousands of dollars every time to just get those answers. So mentorships means exactly that. Guidance on a one-on-one basis where you have exclusivity to me, the person that's basically been in the shoes that you want to get into. And you are asking me to teach you the things that I know so that you can basically progress in this field of real estate.
How do you balance your roles as a financial planner, real estate investor, and mentor?
I think it's all about scheduling, because I know I'm always a financial advisor and planner. So I'm always open and ready for when people want to talk. It's just a matter of where on the calendar I can fit it in. And so my balance is basically keeping myself available 7 days a week, never having a turn off switch, always looking to learn, because I'm still learning as I'm still helping other people to access, what I already know. So that balance for me is just basically being realistic about how much time I need for me, but how much time I know right now I'm sacrificing because there's so many people who need what I have to give. And I want to make sure they have it because they just want to know the business the way I know it. And that's what I want to give to them.
So, what advice do you have for aspiring financial planners looking to transition into real estate investment?
Um, what I would say, anyone that's in the financial field, you already have a good opportunity. Like I was telling you about the family member saying, he said to me, he feels like I'm trying to force him to think like I'm thinking. But the only reason he was trying to say, you want me to think like you, but you have to realize you were fortunate to be in a financial field. So that's the only reason you know what you know. Well, duh, of course, I am privy to all this information because I've been in it. But I also had to learn a lot of this stuff too. But wouldn't you want to rather take something from me or take the information from me because I was there and you weren't? What sense did that make? It didn't make sense. It was just an excuse not to basically invest in himself, invest in his family. If anybody told me, I don't care if you told me, Charles, I've been in the real estate business 20 years and I've invested in 50 properties. I'm going to Charles and I'm going to listen to Charles. I don't care if Charles had the experience to get into that position. That's why I'm going to him because he's been in that position. That's why. Right. So for me, I don't like to see people make excuses because I'm one that I don't take excuses. And I'll tell you, don't make excuses when you're talking to me. If somebody else is out there doing it, then that means it can be done. You just have to ask yourself, are you willing to put in the work that is going to take you to get there? And so my job is to help you get there. So I want to mentor you into doing that. But you have to have willingness. I'm not going to call you every day like a gym buddy and tell you let's get up and go work out. You got to have that self motivation to drive yourself to get up and do it yourself. My job is to make sure you're doing it in the right manner so that you don't hurt yourself in the process. And so that's what I'm offering to you is for you and I to come together, sit down, let's make a plan, let's see how you can be successful because I want to show you how I got to being successful and continuing to grow.
In your experience, what qualities are essential for success in both financial planning and real estate investment?
When you're financial planning and of any sort, and in my case, it's helping people with benefits they need in order to take care of themselves or their families, now and after they've expired. Those people are not running to you and saying, JT, I need your help. A lot of times you're going to have to go out and you're going to have to generate that buzz. You're going to have to generate those relationships. And so when you're investing in real estate is out there already. The houses, the properties I had, they were out there waiting for me. It was either I'm going to get them, and if I don't get them, somebody else is going to realize this is a good deal, and they're going to go get them. So the real answer to that is you have to be not only humble and realistic about what you're getting into. Be humble enough to tell yourself, am I willing to pay the cost that it's going to take? Because it's going to take a lot of time. And it's going to take a lot of studying. It's going to take a lot of, self-doubt. You got to believe that you're going to be able to achieve it first. So you have to be humble with yourself, to be honest with yourself. You have to basically tell yourself, am I a go-getter or not? Am I going to hustle the way I need to hustle? Am I going to put in the work that it's going to take to do all these things? Because it's going to ask a lot of you. Am I willing to put that work in? And if you're willing to put that work in, what direction do I need to go to make sure I'm successful? And that's where you can choose to have a mentor or you can choose to try to do it yourself. I did it on my own. I didn't go to a lot of people and ask how to do it. But again, I also had an inside track into understanding the process and the business. All I needed to learn is the multifamily business is a whole different beast of its own. but I was realistic that I'm willing to put in the work and the sacrifices and the nights of not getting sleep and had making a ton of phone calls and being disappointed a ton. But then also at the end of the day, I was at the table with my pen signing those papers, being glad that I was able to get a seat at the table year after year, buying properties, flipping properties, buying properties now, holding properties. And so this is a great experience for me. I want people to get the same experience. I just want them to be able to do so in a manner that's going to be effective. So I look forward to having those conversations with many people.
So, give us an example of what does that priority plan look like before you actually go out and you start executing that plan. What does it look like from one to, let's say, 10?
The before I did anything, I was doing a lot of research. That should be your first. Just like you asked me the question earlier about different states and what it means to invest in different states. A lot of people don't want to invest in different states because they're so afraid of what can happen if I'm not there and I can't get to it. I remember a guy told me, he was a realtor. He was in Maryland. I was looking to invest in a property that he owned in Maryland. And I told him that I love the property, the money, the numbers look right. I was going to make a profit right off the jump. And Maryland's an expensive state to invest in. But he basically talked me out of the deal in a sense because of the simple fact he told me, well, you don't want to invest in a state where you're not able to get to the state to manage and watch it. And what he was basically saying is if you have to do any renovations, any work getting done to it with the contractors, it'll probably be a disaster for you to invest in that particular property. And so, me not knowing anything, I walked away from it and I said, you know what, he might be right. And I walked away from it. But then I looked at it and I saw all other investors doing the homework and realizing they were investing in properties, and none of them, some of them didn't even see the properties they invested in. Till this day, they may have owned them for years and never seen them in person. So I said, if they're doing it, why am I not going to do it? And that's where I got the boldness to just take on the task of investing out of state. So I just encourage people, don't allow other people's thoughts and opinions about things. Now, there's some professional opinions you should listen to, but again, it all goes into how much work am I willing to put in, regardless of the fact what other people may tell me not to do. Those properties are now thousands of miles away from me, but I'm willing to travel to them if I need to. But I put people in place in that vicinity to take care of all the needs I need with just me picking up the phone. And I manage the properties myself. I don't look for other people. I'm not paying somebody 5 or 10% to pay to manage a property. And all they're going to do is answer the phone and troubleshoot. And so why can I not do that from here? So that's what I would say to anyone else. Don't be afraid to invest at other places. Take on the risk, but be willing to put in the work that it's going to take to be successful.
So, basically, the that plan you're saying is to just basically just is it from the real estate perspective, or is it from the financial planning perspective, or of how you put this plan together before you execute? Like,
Well,
what is the first, second, third, fourth, and fifth things that you should do in order to enact the plan to execute it to perfect it?
now, financial plan is a whole different genre. So when we talk about financial planning, that's just really just someone deciding what they want to do with their goals and how they want to achieve it. So financial planning right now for someone, when it comes to the investment side of things, that's not going to be something that they'll be able to take advantage of and utilize that right now. That's something you set up for the future and look into buying and borrowing from the things that you have set up. So you could be looking at 5 years or down even more down the road before that becomes a lucrative option for you. So when you just look at the steps of investing per se, When you're investing into a property, you're basically saying, I need to know, one, like you asked the question earlier, what state am I going to invest in? Am I going to invest here where I live, or am I going to invest outside the state? Once I invest outside the state, a lot of times the investors that you use, they like to be in the state that where the property is. You don't have to do it that way. I have the company that I was going to use was in Texas, but something fell through. It didn't work out. My investor ended up being in Vegas, a reputable company in Vegas. So it doesn't have to be the lender being in the same state as the property. It just makes it easier for you because they know the lay of the land. They know the rules and regulations and the laws of that particular state. So that benefits you to have a lender in that particular state. And then from there, once you understand the lender that you're going to use and you start going through that process, if you're already set up, your credit is where it needs to be, or if you got your business set up with your EIN number, you're going to put everything under the umbrella of your business. That's a question too. Do you have this set up? I don't ever recommend anyone buying an investment property under their real name, because of the simple fact you're missing the benefit of what you can do. I was telling a guy one day, the guy that actually signed the notary to sign my documentations with me. I was telling him about the EIN number, and he had no clue what I was talking about. And so I was explaining to him, you don't buy anything under your name when you start going into business. Everything should be under your EIN number. The properties you have, the cars that you drive, everything that you do should be under that. So that way your personal credit is never affected. Your personal credit will be used to make sure that you're a liable candidate for the loan that you're asking for. But outside of that, everything else is going up underneath that EIN number, that business credit. And as that is building, people will just start, lenders and other credit card companies will just start throwing money at you as long as you keep up with those things. So basically having everything set up, your business set up, having your credit where it needs to be, getting investors involved, understanding that once you get to the investor side of things, can you afford the property? If you can afford the property basically is going to be the performance of why the lender is going to decide whether they're going to take the deal or not. A lot of people don't realize that you don't have to have a job to even buy an investment property, because the lender doesn't care about if you're going to a private money lender. They're not asking you how much you make at your job. All they want to know is if you're buying a property and it costs you $300,000 for this duplex, and your payment is going to be $2,000 a month, but the tenants are charging $1,500 per unit. That's $3,000. So you're making a $1,000 profit, and then once they deduct all your expenses, if that makes you come out on top, then I don't need to know what you make at your job. You're going to be able to be approved based on the performance of the property. And so people get floored when I tell them you don't have to have a job to get an investment property, but it's the truth. So again, guidance, understanding what you're getting into, and someone helping to guide you so that you know what is a benefit and what doors are open to you that you may not even realize yet.
How do you flip those assets under your EIN number?
Go right back to the sources that once you already have a lender, they'll be eating out of your hand, because once you have a lender that sees you have a good deal on the table and they're already saying, hey, by the time you even close on the deal, they're already trying to set up when you're going to come back and do all the other business with them. Hey, in 6 months, you can make the payment on this for 6 months. And if you ever want to refinance it and you want to take money out of it, come back to us and we'll do the refinance for you. You keep it in house. We'll give you a discount. We'll give you a discount on the rate. We'll give you a discount on the closing costs. You're already going to have a plan as you're going along. Once you close on that property, those lenders are beating out of your hand trying to keep your business. They don't want you going elsewhere, flipping the property and then giving it to somebody else. They want to keep business in-house. So for me, the properties I'm doing now, I'm keeping them in-house so that I have that passive income. But if I'm flipping the property, they're going to be asking me to come back with the next project, and so great opportunities out there. You just have to know they're out there.
How do you approach risk management and your investment strategies, considering your background in financial planning?
I mean, when you think about risk management, it's all about an understanding of the business. And so when you think about the risk that it can take, a lot of people, I do see, and I don't mean to say it as if some of these mentors you see on social media are not good at what they do. Some of them are really informative. They give you some real good outlines on how to lessen your risk. So again, that all goes into education. How much did you educate yourself on the process? How realistic you're being? Sometimes people take chances they don't need to take during the process of buying. If it gets to the point where you can't do it, pull out of it. But if you're not willing to pull out of it just because you want this deal so bad, you're setting yourself up for failure in some ways, or you'll be locked into this situation for a long time. So the goal to manage your risk is educating yourself, and again, have a understanding you're under the umbrella of someone that's either done it before, or you're following a blueprint of someone who has done it for years and shown a track record of doing really well with it, and that lessens your risk.
Can you share a memorable experience from your journey as a real estate investor that taught you valuable lessons?
My real estate journey, one of the things is you got to be patient. Sometimes I tell you, when I started, one of the businesses that I own is I do, of course, a lot of people were involved in the Airbnb and the short term rental business. So I've mainly got into the short term rental business. Um, and one of the things I learned is I was being very impatient. I was trying to scale so fast. I was doing things unorthodox. I wasn't planning financially right. I knew I had the money, so I was just going in and trying to stack the apartments, as many apartments as I can get. I go in and I furnish them, I decorate them myself. But then, of course, there are going to be things that are going to come back and haunt you. And with the Airbnb business and the short term rental business, one of the apartments I put units in, they came back to me and said, "Well, listen, we're not going to honor this particular contract. Once it dies out, you got to move all this stuff out." Um, I would have known that was going to happen had I took the time to read some of the documentation the lady gave me that told me that they were doing a changeover in management, and that would affect some of the tenants that were having expiring leases. And so basically, in a nutshell, sometimes when you rush to try to scale and you want to see success very quickly, you can overlook a lot of things that can hurt you in the long run. So I lost those apartments, had to move all that stuff out, lost profit that I could have been making, and I dumped a bunch of money into it because I had to pay for all of that furniture and things that went into those, the money to get into them. So all that money was pretty much a loss, at the time. And so not being patient basically led to that.
So, what motivates you to continue mentoring others in the realms of finance and real estate?
Just being able to see success as I see success for myself, as I see things happening, it gets me more excited. Being able to talk to people, I'm excited about the opportunity being here with you today. Somebody's out there and somebody's listening today, and so they're probably getting, hopefully, inspired that there's this man here that obviously has been through some things. He's been through some trenches, and he's still able to come out on top and actually make a success out of the business endeavors he's making. So that excites me to continue to look towards mentoring people, and being able to help people to progress and the goals and the dreams that they have for themselves.
And how do you approach mentorship differently in financial planning compared to real estate investments?
Financial planning, when you're mentoring people in that sense, the real difference is just there's numbers that you are going to the best way to say it is one plus one in mentorship when it comes to financial planning. What makes sense to you, plus what makes sense for the goals that you're trying to achieve, and so that equals what your end result's going to be. So one plus one to me is just the best way to say it. You tell me what you want to do. I'm going to tell you what options you have available to you. And then that's going to be your end result. And that's going to equal your end result. And so I want people to realize that when they're looking into financial planning in the sense of coming to me, to help them build their financial future, that's going to give me the opportunity to assess where they are and then help them make the right decisions. But when you think about real estate mentorship is such a longer relationship because you're going through so many different, you know, ups and downs of the business, and you're trying to sustain it. Because once you're investing and you're in the right plan that's for you, that plan goes until how long you've set that financial goal up for. When you go into investing, anything can happen to you. Anything can go up in smoke tomorrow, and you signed the dotted line on that contract, and then you had tenants all in their properties, and then five tenants decide they're not going to pay their rent and they leave the property. There's all kinds of things that can happen to you in the business. So you have to be sure this is what you want. And if that's what you want, the mentorship goal is to help you to navigate through that process, making sure that you're really set up for success.
And in taking us to this very last situation here,
Mhm.
um, what is the best advice you can give the everyday person that's listening to us right now as to some things to do to get started?
The first thing is I would say you need to know what you want first. Again, you can't make a plan without knowing what you'd like the plan to look like when it's all said and done. So what is a goal that you think that you'd like to achieve? I'm not going to say anything to set any type of bar. The bar that's going to be set is based on what work you're willing to put into it. So all I can tell you is that you set the bar as high as you want to set it, but be realistic about what you're willing to do into it, you're willing to sacrifice, and then surround yourself with the right people. I hear people say a lot of times, be around people that basically have the same dream as you, people that are trying to achieve the same goals, people that have already established themselves in the business that you're already trying to aspire to get into. So that is a true statement. Talk to people that basically are already investing. Talk to people that are trying to get into investing. Bounce ideas off of people. Get the right mentor that's for you. Get around people that are already investing already, that are already showing a track record of success. Those types of things are going to help navigate and get your mindset correct. And then it's up to you now on the steps you're willing to take to get to the next level.
And how do people get in contact with you if they want to get into any of these programs that you mentioned in learning about the mentorship?
Yeah, so right now we have set up right now. You can go on to all of my social media platforms. The social media platform you look for is Instagram, Facebook. I have platforms set up there. It's called All Things J True. So just like it sounds, all together. ALL Things J True, JTRUE, and you can go on there. We have a link there where you can hit the link and you can set up a calendar date with me for your 30 minutes. I blocked out specific dates during the week that I definitely can sit down and make just personal for just one-on-one conversation and discovery and fact finders. And so go on to those websites and pull up those links. And then also you can also go to my Gmail account, and it's JTLR llc@gmail.com. So you can go there, send me a direct email. But definitely, I encourage you to go to the platform if you want to sit and do a one-on-one 30-minute. Won't cost you anything. Go on there, click the link, and schedule it. And I'd love to see you there. Be glad to help you get started and whatever you want. And even if you're looking to basically set yourself up with things and the financial side of things, as far as, we have a lot of things that we offer as far as products. Many people don't think about their health right now. We have an opportunity for critical illness, things that people think of life insurance and they just think it's a benefit after I'm gone. But there's a lot of things that you can benefit from. Like my wife, I'll just say real quickly, just battled cancer last year, and so we were just saying that if she had a critical illness policy, she's still alive. She fortunately was able to beat it, but the critical illness policy that we would have been able to set up for her, she could have had a $50,000 policy. And the moment she was diagnosed with it, whether it was terminal or whether it was treatable, she would have been able to have a check cut for $50,000 while she's still alive. And now she's recovered, but has all these doctor bills now. So that 50,000 would have went a long way to helping her in that case. So I tell people, if you don't have anything great right now, you're doing well, your health is good, great. But as you get older, things unfortunately happen. Set yourself up for those type of things. Heart attack and stroke. Some people, men are more likely to have heart attacks and stroke. Are we set up that if I have a heart attack and I survive and I can't work for a while, will I be able to take care of myself? Well, you have a heart attack and stroke policy that might cost you $10 a month. They're cheap, and they're living policies, benefit policies that you can benefit from if anything should happen to you. It's not Aflac. People talk about Aflac all the time. That's not Aflac, and so I hate when people say that. It's not Aflac. But and one more thing about that, people say, well, I already got everything I need through my job. Yeah, that's group insurance. It may cost you $5 for $100,000 policy because that's all group insurance because there's so many employees. But if you get laid off or you get fired or you decide to go to another job and it takes you a month to get a job and then you pass away, none of the stuff you had with that previous employer is going to take care of you. Had you set up something outside of that, that is going to always follow you no matter who you're employed with. So people don't think about they're trying to take advantage of the little bit of money that the job gives you, but those things don't follow you. So I try to stress a lot with people, set yourself up so you never have to worry about it. It's not as expensive as you think it is. That's why you talk to someone as myself to help you understand the truth about what you should get involved in and what you can afford and what's beneficial to protect yourself and your family.
Well, I thank you so very kindly for taking the time to be here with us.
Yeah.
And I definitely want to ask you in advance that we definitely would love to have you back on the show.
Oh, yeah.
Because if there was information and there was learning experiences, you just laid it all out.
Yeah.
As best as you could possibly lay it out. And I definitely appreciate you for that.
Yeah, definitely. I got so much more to share. So definitely have me back. I'll be able to give, when we come back next time, I'll give people some more insight to things how to set up your EIN number, exact companies that I've used that work really great. Be able to share with people some of the vendors that I use, the lenders who actually loan money to me to buy these investment properties. I'll share some of that information as well. So plenty to gems to give out.
Yes, sir. We definitely look forward to having you back, and I thank you so very kindly for your time.
Thanks for having me.
I thank all of you out there that actually watched us this evening, and you just learned the best thing you could ever learn, I guess, about getting your life set up and how you want to move and shape. We thank Mr. Truehert for being here. I thank you all for watching. Those of you that are watching on the YouTube channel, I would appreciate it if you would just hit the subscription button as well as the notification bell. And therefore, you can catch every show. If you miss one, you'll be able to catch them all. I thank you all for your time, and we will see you all next week. on America in Black and White.